Hi there, welcome to my channel. Here's a real brief update on my portfolio and how I did today. Today early this morning when I woke up, I was able to buy QQQ for $702, and then I immediately sold it for $703. That was very early in the morning, and that was a profit of $300 in just a few minutes. So let me show you guys that trade down here in the trade history so that you guys can see that I did that trade early this morning. It was about 5 in the morning or something like that, because that's when I usually wake up to go to work. So if we scroll down a little bit, here it is. As you guys can see, here's the limit buy for this morning. I bought 300 shares at $702. And yeah, it was 5:17 in the morning. So at 5:17 in the morning, I bought 300 shares of the NASDAQ for $702. And that cost me $210,600. Okay. Later on, just maybe a few minutes later, let's take a look. Yeah, just a few minutes later, as you guys can see here, by 5:34 in the morning, I sold 300 shares at a price of $703 per share, making a profit, as you guys can see here, the realized profit of $300. So it was about maybe less than 20 minutes. So in about less than 20 minutes, I pocketed $300 by doing that trade early in the morning. Soon after that trade, I decided to sell a cash secured put. So since I was fully in cash, I did this put, 3 contracts, and I received a credit of $2.59, which turns out to be $776.88 in profits. So just in between those 2 trades today, I made $1,000. I also wanted to do one more put, but I wasn't able to really profit that well from this put. I didn't sell for a loss, but I didn't profit as much as I would have liked. So initially, I started that put almost towards the end of the trading day, right here. 3 contracts for a price of $1.32. So if things would have gone my way, which they didn't, but if things would have gone my way, I would have made $395.88. But I decided to close that put. The way to close a put or to get out of a put is to simply buy the put back. So that's what I did. I bought the put back. I bought it back for $1.10, 3 contracts. So that cost me $330.12. So I did make a little bit of profit on that. As you guys can see here, I made $66. So I didn't lose any money. Of course, I didn't make if I would have allowed it to expire, but of course, it was not going my way. So I took the profits that I could. If it would have gone my way, I could have made another $396, but I didn't, because the price started to drop. And if the price would have dropped even further, then I would have had to own the shares for $707. So I decided to just exit the position. And so the way to exit is to just buy them back. So I initially sold a put for $1.32 per times 300. So that turns out to be $396. But I didn't make $396 because I sold it or I bought it back to close it, and it cost me $1.10 to close it. So I only made $66 on that trade. And pretty much that was the end of the trading day, so I didn't do anything else. Currently, if we go over to my portfolio, well, let's go to the NASDAQ. As you guys can see here, the NASDAQ is dropping back down. So basically, I took my last trade somewhere up here and decided to get out. And so we'll see what we're going to do tomorrow. Don't know exactly what I'm going to do tomorrow. Maybe, as you guys can see, the price is at like is at $702.60 currently. You know, $702.60, just about. So if I go to trade options, I'm fully in cash. So I'm assuming trading a cash secured put for tomorrow. A 702 strike price is $1.87. The 701 strike price is $1.62. So I'm doing at least 3 contracts, which 3 contracts would be like 300 shares at a time. So $1.62 would be, you know, close to about $400, more or less. Maybe like $460, I assume. Though this strike price at the 701 for tomorrow. So I might do that. There's a 75% chance of profiting currently right now. Don't know what the market's going to be at tomorrow. As you guys can see right now, QQQ is heading back down. It may be because of, I guess, renewed U.S.-Iran hostilities, this information that's here. It says, renewed U.S.-Iran hostilities have sharply reduced shipping through the Straits of Hormuz, causing Brent crude prices to surge 26% since early July. This spike in oil prices is fueling inflation concerns and weighing on risk appetite, directly impacting tech-heavy ETFs like QQQ. So because of what's going on geopolitically, that's why I guess QQQ is going down right now. If we go over and look at my portfolio here, we are currently at just about a little bit over $250,000. And so as you guys can see, today my portfolio doesn't look like QQQ because I no longer own QQQ. I did make another change to my portfolio today. I ended up selling Box. So if we look up Box is basically just a cash equivalent. XX. Box would be similar to holding like SGov. You know, you can look up SGov. It's just a cash equivalent, just like this ETF. The only difference between Box and SGov is that Box doesn't pay a monthly dividend. What Box does, it just adds it to the value. It just adds it back to the price. So Box just gradually moves up. If we look at the 1 year on Box, as you guys can see, it's up just a little bit over 4%. It's not very much, of course, but if you were to buy Box just basically goes up very slowly and to the right. Whereas basically if you look at SGov, if you look at SGov on a total return chart, it's going to look like Box. If we look up SGov right now, it's not going to look like this. It's going to look different. And so, as I mentioned, the difference is that SGov pays a monthly dividend and Box does not pay a monthly dividend. It's kind of like, just imagine owning, for example, SGov, and instead of taking the dividend, you just reinvest the dividend. Basically, that's almost what Box is doing. It's not paying you anything, it's reinvesting. And so I decided to get out of Box, and I did, make a little bit of profit on Box. I can show you guys that down here. When I sold Box, as you guys can see here, on July the 2nd, I bought $100,000 worth of Box. On July the 22nd, I sold over $100,000 worth of box and just made $270.79. So not much, but a little something. And so if we go back to my portfolio here, what I ended up buying is an ETF called Liquid. I was waiting to buy this at the dip. This is basically just like SGov, except for it pays a little bit more, and it's a little bit different from SGov, but it's basically a cash equivalent. It will rise to a peak. In this case, it's 25.10, and then it'll drop down to 24.98, and then begin its rise again. And the reason it drops is because it peaks, right? It peaks 25.10, and then it pays you 11 cents. So it drops by 11 cents every month. So that's why this is down. I got in at 24.98. So currently I am down $24.15, but by holding Box will be paying me on a monthly basis roughly about $400 a month. Just from owning Box. And so that's what I'm doing so far. I own Box, get paid $400 a month. I am doing options and day trading QQQ. And so far so good, because today was a profitable day, $1,000 of profits. And hopefully I can do it again tomorrow. So we'll see. Hopefully I'm able to do it again tomorrow. So yeah, those are my plans for tomorrow. I'm either going to just immediately day trade, trying to make $1,000, maybe a day trade, then maybe selling a cash secured put or something like that. But we'll see, because I don't know what's going to happen tomorrow. Who knows if this is just going to skyrocket back up or if it's going to go back down. I don't know what's going to happen. So please like, share, and subscribe. I really would appreciate it. You guys have a good one. God bless. We'll catch you in the next video. Bye.